Monday, and it's Hannah here. And today, as usual, we take some questions, just see what people are asking, and then I will answer your questions. So it was actually as per request from quite a few people, because most of my clients, they probably one side they have a day job, on the other side they do have rental properties, or they start looking into getting into rent out the property to have investments or have some extra cash. So today is really talking about the tax implications when you rent out a property, and also how you rent it out. It's actually different tax-wise. So by the way, here today from my side, I purely focus on the tax implication. I'm not an expert in property investments or property portfolio. So if you are looking to like strategy side of the advice, then do look for some property experts for it. But today we purely focus on the tax implication, how it is, what are the impacts on the new tax change, and what are the options out there for you to consider to mitigate the tax change. I think that's a quite hot topic at the moment. Okay, so let's start with some basics. When you have to declare the rental income, so if you're starting out, or if you're a homeowner, or you just rent out the spare room for just to earn extra cash. So there is a rent a room relief at the moment that is allow you to earn up to 7,500 for the year. Then say if your earning collected for the year is less than 7,500, so you don't have to declare that in your tax return. Or if you're just starting out and you only have like £1,000 from the rental income for the year, then you don't have to declare that income either. So currently there's exemptions out there. And of course, if you have like investing sort of property funds within ISA, so as we know, ISA is a tax-free environment. There are investments you can choose from. There is property funds within investment ISA. So if you're earning income from there, that is a tax-free environment. So you don't have to pay tax either. But for ISA, do speak to a financial advisor about ISA and investment. Okay, so these are the three kinds of scenario where you don't have to declare the property income. But if you do rent out a property otherwise, then you do have to fill in a tax return. And also, I think from the experience, I do come across some people, they probably rent out the property, but probably they are not aware of this sort of need of filling self-assessment or declaring the tax. But then eventually taxman find them. So don't do that. If you are earning rental income other than those conditions I mentioned, do look into register yourself, self-assessment, and declare your tax return. Okay, so these are some basics. And that also leads to our very hot topic about the tax change and what are the implications and what are the impacts. So it's all started from 1718, which is current tax year. So if you're having buy-to-let property and you're paying mortgage on it, so from this year onwards, the government eventually want to cancel this tax relief on the mortgage interest. So as we know, mortgage interest can be probably the biggest expense currently for the buy-to-let landlords. So if they trying to cancel this tax relief, that can be a significant tax change. So, of course, for this, I'd love to have the proper figures to demonstrate what exactly are the impacts, and also it's different from each individual. Of course, there's a restriction. There's some restriction on Facebook Live itself, but I do have a video that's share. I have a screen share that I do demonstrate what are the impacts. Later on, I'll put the link below on the comment, or if you are watching through YouTube, I will also put a link as well, so you can refer to that. But just to give you some illustration, if I just talk through it. So if someone have a day job, but it's earning under 45K, which is like a basic rate band. Say if you are earning like only 20K from your day job or other income, then that is the basic rate taxpayer. So if you have this rental property, you collect the rent, buy-to-let rental income for, like, say you have £50,000 for the year. Your mortgage interest is 30,000, and other expenses you have 10,000. So that gives you £10,000 profit. So what are the impacts in this case? If you're only earning 20,000 from your day job, actually from 17, 18, they probably don't have any impact on you, because the restriction is on the sliding scale. So 17, 18 only, you can still claim like 75% of it, but it's until 2020 to 2021, then that interest relief will be completely removed. So that's by 2020 and 21, the impact on you, perhaps you have only 50% of what you have now in your pocket. So I've done a calculation. In this case, after tax, before the tax change, you have £8,000 in your pocket. But in 2020 and 21, you only have £4,000 in your pocket. So, but of course, from 17, 18, that doesn't have any impact on you yet. So probably you don't rush yourself at the moment, but you do need to look out for strategies for long term. But what if you are if you are earning like £40,000, if you're already high rate taxpayer? So that's already have immediate impact on you. So from this year, perhaps you have around £2,000 less in your pocket. But eventually 2020 to 21, that impact is significant. So perhaps, yeah, either way, if the impact is not too much or not impacting you at all at the moment, perhaps nothing need to worry about, but the tax change. But you might need to look out for some further strategies, further options to help you to mitigate this tax change for long term. Okay, so yes, it really depends on your other income, and also, as said, mortgage interest is a big part of it. So by 2020 or 21, you can see some people might, for instance, in the first case, if you are the basic rate taxpayer, but when they completely cancel this mortgage interest, then perhaps most people will push up to like high rate taxpayer. So it's end up, perhaps for some people, it will end up having a negative in their pockets. Probably they end up running a loss. So really need to look out for some options. But again, for the property strategy, the tax strategy or property investment strategy, I would say prioritize your investment strategy first. Don't come up with any strategy for the sake of just saving tax. So prioritize your overall long-term investment strategy first, but you need to be aware of the tax implication and what can benefit you, so you can incorporate both. So don't come up with anything for the sake of saving tax only. Okay, so here are some options you can take into consideration. So first of all, probably that is the cheapest and most straightforward, but only if you have it. So if you previously having a property loss, then you can just carry forward your loss to offset your profits. So that's really, if that's applied to you, that's the cheapest and most straightforward strategy for you to mitigate your tax. Okay, second consideration is if you are married couple and currently the buy-to-let is under your name only, but you might be able to consider having the shared ownership. In particular, if your spouse is either not working or earning at basic rate tax band. So that can, when you share the ownership accordingly, that part will be reported. That part, like his or her share of that property profits, will be reported by the lower tax bracket. So that will help you to save tax as well. So if that's really one one option for you, you can consider as well. Okay, so the other option is also just for your information, if you intend to, rather than continue investing in residential property, you want to go for commercial property, or you want to convert them in the holiday letting, like become Airbnb, then you can still claim the full mortgage interest relief. Okay, so if commercial or you are doing the holiday letting, then you can still keep the full tax relief on mortgage interest. So that's a good news. But of course, as said, go into either commercial or short-term letting only if that is your intention, only if that's your strategy and you are committed to do it. So don't change your strategy or don't go into something for the sake of only saving tax. But if these are the intention for you, then probably it's a best time for you to consider having the change. And of course, you will need to look out for your plan and what you're gonna do, especially when you want to do the holiday letting. That is eventually a business. So it's a different mindset between having the property, collecting the rent, than this holiday letting, because constantly you have to advertise your property, and it is like a business, and it is really a lot of work included. So only change your strategy when you intended to do and when you are committed to do it. Okay, so another option is actually a lot of people asking about having a limited company. Yes, having a limited company will still protect you from having the impact on property mortgage interest relief restriction. So if you are having the property in the company, you can still keep that full mortgage interest relief. And of course, corporation tax at the moment is only 19%. So by explanation, that is a huge tax advantage. And in particular, you can, again, have different people, like have your spouse or have your family member become a shareholder of your company, and you can share this company income as well. But again, one thing you need to consider is if you are running a very profitable property management business, the dividend tax is not as good as before. So that part needs to be considered as well. And also when it comes to forming the company, especially when people consider transferring the assets into the company, if they don't do it correctly, there's a capital gain tax implication in it. So need to be careful on it. And also the downside is for the properties held in the company, like the mortgage options, they are very limited. So these are some downside you need to consider. And of course, limited company, there are more administration burden. You need to file the company accounts and company tax return every year. And if you're hiring someone to manage your property and still need to run the payroll, just like a business. So really need to be careful, do it properly, and be careful with the downside of it as well. But overall, like said, if you have like only 1 or 2 properties, really run your numbers. I think it is really important to know the numbers. If the impact is gonna be immediately very high or not much, so you can take actions accordingly. If currently the impact if you don't have any, doesn't impact you too much, then you only have 1 buy-to-let, and you are the basic rate taxpayer, then that doesn't impact you at the moment. So perhaps you can still keep that one property under your name and don't have to do anything. Just need to be aware of what are around. But you can, if you are looking to invest in further properties, you can form a company and have them in your company. So the further property will be protected from the tax change. Okay, so, these are like options: loss relief, share ownership with your spouse, going into commercial or holiday letting, or form a company. These are common strategies that you can use to save tax for buy-to-let landlords. But of course, as said, the situation is different from each individual. Do need to speak to an advisor, or you can speak to me. I can run a number for you and to see if that's a really immediate impact on you, or is that not too much, and say what are the options you can consider. But again, for the property investment strategy, I'm not advising on investment strategy. What I do is really make sure you are aware of the tax implication, the tax change, and what are the options tax-wise, for the pure tax-wise, what are the options can be beneficial for you. But for the overall strategy, prioritize your intention, prioritize your overall investment strategy, and then consider the tax strategy. So, okay. Again, I hope you find this one useful. As said, if you do have any further questions, any doubts, do get in touch with me or your advisor, or if you already have one. I do have my Facebook group, which I will put a link below as well. If you are watching on YouTube, you also get the link as well. So be free to request to join. Not just you can connect with me, you can ask questions, but also you can connect with our panel of experts. We have also financial advisor as well as business experts who can help you to earn more money and grow your wealth. Okay, so again, I hope you find this episode useful. And any questions, please be free to let me know. And I hope you have a wonderful evening. Okay, bye now.